Yeah. Welcome back. Day Trading Radio, back on the air. 7 o'clock. If you're out there, you're about to get blown away. Hey, Deadhead. All right. Pretty tough music I got on here. I can't take it anymore. I'm going to throw the computer right out the window. All right, so good evening. DayTraderRockStar here with you. It is a little after 7 o'clock on a Wednesday, but this video is going to be good anytime you listen to it. This is not going to be based on tomorrow's action or tonight's action and stuff. It's a little educational video for you, based actually on today's action. A couple things we learned today, and able to really define a lot of the setups in what we call an HPS playbook play. HPS playbook plays. Well, let's start from the beginning. HPS standing for high probability setup. High probability setups are the trades that I like to take in my business as being a trader. Trading since 1996 full time. Going live on this show 2007 makes us like the 12th year anniversary, which is pretty cool. Over all those spans of time, I wasn't a good, I was lucky in the beginning, unlucky, news. You learn all the time. You learn trading all the time. There's going to be times when you're going to get crushed. There's going to be times you're going to make a lot of money. And some of those times are going to be due to your knowledge and your execution and stuff. And some of them are going to be due to unforeseen events, news, disasters, whatever. So you have to take the good with the bad. Not every situation is going to be your fault. You could be caught in a bad market. You could be caught in a bad stock at a bad time, and it could hurt you. But if you apply certain rules in the market overall, you're going to have the best chance to make money in the market and make a career, or make money. That's all. I'm not even going to talk about a career. But that's so hard to do because this is easier than going to a casino. Basically, you just have to. This is online betting, basically. I hate to say it because I was always against that growing up. When people would look down on me because I told them I was a trader, I said, "Well, isn't that gambling?" I said, "No, I'm a technical chart reader. I have I read charts. I develop my charting ability over time, but when it comes down to it, you could be on a chart, you could be on a trend line, you could be on a support line, a resistance line, and that market could give way. So there's still no guarantees in the market, but there's no guarantees in anything.
Tradometer YM oversold.
So why are we looking for anything special
Tradometer
here?
ES oversold.
There's this rule applies in everything you do. The object here in anything is to put yourself in the best position possible to make that money. Now we could take an easy route, and get a corporate job, and get paid, weekly, and get insurance and do all that stuff and just live the life. Well, we decide as traders to take a little bit more of an aggressive approach, maybe try to make a living on our own. And we see that the trading could give us that opportunity. But it's also like, oh yeah, I have a dream of being a professional poker player too. I'd like to make a living doing that, but that seems a little out of reach. This has the attraction of being within reach. But so many people get stuck into that thinking it's that easy. All I have to do is get on the stock and it's going to go up and whatever. Sometimes it is, sometimes it's not. But to tell you the truth, the majority of traders fail because the situation at hand, you are free to do whatever you want in this market. The market will give you great opportunities, but we're here all the time. And when it's not giving us great opportunities, we might be searching for something else and trying to make money other ways. And that always lowers your risk. That always, increase your risk, lowers your probability. So over the years, you have to develop something. The longer the person's been trading, the more he's seen, the more experience he's gathered, but also probably the more simplified his trading has become. In the beginning, as a trader, you'll search for that holy grail. You'll do all kinds of search. You want to make it on your own. You will not accept anybody else's way. You will not accept anything other than what you feel like you need to accomplish and your goals, and you need to make yourself. You can't believe in anybody else. And I was the same way. And I still am. It's hard for me to take someone's advice in a chat room or a trading room, especially when surrounded by so many great traders. And that's okay with me, because everything now for me has to be applied to a technique, or it has to fit inside of a tight criteria. And if someone does show me something that fits that criteria, I'm more than willing to give him praise and credit for a great setup. But until then, it's very hard for me to take other trades out there just because someone likes it and I don't, and then it might go up and you feel bad and you chase, and mentally trading is very hard. It's very, very hard mentally. And again, that is another reason why you have to develop, and this is where this video is going to lead to, you have to develop a method that keeps in check your emotions, keeps in check your greed, keeps in check everything that's weak in you, that's caused you to fail in the markets. Because that's what the market feeds on. It feeds on greed, feeds on fear, feeds on hope. So you have to develop that. I think I've developed something very good, and that's what I teach, and it's a logical approach to the markets. And when I teach it every day and show you setups that happen every day, and you see the results and the response, the weak link, as we know, is the individual trader. I miss half the setups that I want to take for whatever reason. But once I miss it for a tick or 2 ticks or 3 ticks, whatever, it becomes a mental game for me. And then I decide, hey, I should have been in on this. I'm not going to chase it. I'll wait for another one. At least I know there's another setup down the road. And when I do see them and we are able to take them, they usually work out fine. They work out great. So that's what I'm working on. That's what I'm always trying to work on, is my discipline and my patience and my focus. But I'm going to have an excuse because I'm always dealing with the show. I'm always in the chat room. I'm always checking out different charts, and I'm not going to be that. So we've developed a system, a method to kind of identify these setups, and then we could now maybe program them to get those things. And that's probably at the point where we are now with some of the rock bots and the ram bots, and we could identify these levels, but we still have to trade them. And then
Tradometer NQ oversold.
And all these things you hear, these are all tools that we use here at Day Trading Radio. To help us with our analysis. Excuse me. I'm sorry for my cough. So, for me, developing that criteria to kind of base that, I think that's a great base. It's a great start. And everyone should develop their own. And take mine if it works for you. Definitely. Take mine if it works for you, or adjust it so it works for you. Everyone has a different personality type. I've got to believe that. Some people are very strict and disciplined. Some people are so-called, quote, anal. Some people are very lazy and a slob. Everyone's a little bit different, and certain personality types really define a trader. If you're a fast, tight stops, takes things off after 10 cents. It's almost like you can't even get in and get out. He's in and out so many times. And then there'll be another one who will take scale in, or drop, and be a nice scale in, and then wait it out and be up, and there's another side of the tape on the other side. It's just so many different type of traders. So I love this. I love figuring out the puzzle of the markets. The markets are truly a puzzle. I always say they leave a trail, a map. You know, you can always look back at the markets and look at things. And over years and years and years, I've developed these indicators. Well, I haven't developed the indicators, but I've developed a system that works with these indicators, and in my own way made my own indicator, you know, the combination of indicators. We want to have that's called the high probability setups, where I've noticed, yeah, we might have a good oversold stochastics are a main part of that. But if it'll work better if it's on a trend line, and it'll work better if the 5 minutes, you know, so there's all these little pieces here. So over years and years and years, you're able to establish these trades and kind of map them out so they're very easy to get into, to establish, you know, see the entry, to understand why you're getting in, have the logical place to put a stop, and overall have a high percentage success rate. That's what it's all about, you know. So this is the part I could do. I could show you where to get in, where the stock is most likely going to bounce. I cannot determine, you know, the greed, the fear, and everything else that comes along with it. But I can tell you certain levels in the market which you should trade into. And over time, you will become a boring trader. But if you become a boring trader, you will become a successful trader. Now, I wish I had a quote like Bruce Lee said with water. But I don't. There's a little divergence right here. And you can see a little further pop out of that. So today, we're going to give you just a look back at the markets. And this is the title of this video is pretty much how to read the market. Reading the market's like reading a game trail if you're a hunter. It's reading the weather, you know, the clouds and the atmosphere, you know, and knowing what's coming or what could be coming. So we're reading the markets. We're looking for opportunities in the market that we find that repeat, that are high probability setups, that we know combine. And I'm not going to go into the whole high probability setup methodology. You can find that at the School of Stock. If you want to learn about that, you can go to theschoolofstock.com and learn. I have 2 courses there. Or if you're a member of Day Trading Radio, you hear about it every day. I mean, that's what I do. So you're kind of getting hands-on. But if you want to have it in your hands, personally, theschoolofstock.com. There's 2 courses there. So today was an interesting day. We had a pretty much downward trend. But we also developed, you know, what we call a little patience in the market. I saw a lot of people jumping into certain stocks, LABU, and you know, all kinds of stocks. You know, that's what people are doing. They're trading. But the overall trend started to weaken as the day went on. So this was a great example because we were following the markets live, and I wanted to point out every opportunity, at least the levels that I liked. Now, if you're not comfortable getting in on a downtrend like this, that's fine. But it's also very important to understand the levels that we pointed out. Today was a great day to look at HPS setups. Now, the market was, I would say, more of an aggressive downside bias today, with the market here really trending down, barely getting over the 200-period moving average. So there was more selling opportunities than buying opportunities. But the buying opportunities were there also. But there weren't. Whenever you have such a strong trend and you're concentrating on buy side, the first rule of the game is you trade much smaller in expectations on your profit size or where you're looking at this thing going. Never going to really catch. There's only one chance to catch a bottom, and that's where it bottoms of the day. So that I wouldn't count on that, you know. So everything should be taken on a short-term thing. You might have a great setup, and you might have a nice bounce. Normally in the market, it might give you get 4 or 5 points, but in the downward trending market, you might get 2 points. Maybe you get a point. You have to recognize that, and you have to react to it, you know. And the setups are still there. It's just that they're not going to give you the follow-through you want. And we're so used to being, you know, extremely kind of a bullish trend in this market. I mean, I would say, you know, 80% of the traders rather trade long than short. But as we know also, shorts work out great. Here's a great divergence right here. Today, I didn't even mark that down. I think we talked about it, but I never marked it down. But we're going to go back and look at that in a second. Yeah, and I took one too, and it didn't work out for me in the morning. But that's the important thing, is when you feel like something is not right in the market. Like this is what we're going to talk about today. We're going to talk about reading the market and identifying the best high probability setups in the market. All right, and just kind of showing them out, because that's what we did today. So today there was quite a few, and I want to go over it, and it's called reading the market. So the market opens up. We're going to even just start at 9:30. So this is a typical day trading radio. You have the pre-market overnight trade, whatever that was doing, that's doing. The bot is actually running at that time, but we don't put too much into it. I keep it running just for people out there who can't sleep. They want to watch something, they can watch it. But really, the market starts to get active around 8:30. Some news items usually get dropped around 8:30, and then 9:30 is the official open. And from that point on, from 9 to 9:50, it is usually a kind of a snappy area. We can pop and then drop. We don't rarely just take off in one direction and rally. Usually it's a move in one direction, then a reversal, and that's what we tend to wait for. But I always say wait for after that 9:50, because there's volatility in here, and I don't really even like taking the bot trades. I could sometimes identify really good divergences in the first half an hour, but I'd rather wait until that 9:50 zone. And today, again, we talked about the 9:50 because it was such a good setup yesterday. And the 9:50 area, we just talked you into it. I said, all right, here's the 9:50. This is where they usually turn things around and we get our first bounce. And now that happened exactly. So, clue number one, time frame. What's a good trade? First trade of the day. If it's not a divergence, it's a 9:50 reversal. Probably could have made money on that. All right. Market moves up here. It pivots down. I'm not looking at anything. I'm letting everything just do what it's doing. All right. Do what it's doing. We're actually following relative strength in individual stocks. So we're seeing certain stocks at this point, our LW was ripping higher. But I guess it ripped higher until about we started turning over. I guess it was the same time. So market comes down. So now we have an established top. We have our first pivot, which was a 9:50 reversal. We have these other lines on the chart representing the VWAP, the 200 EMA, the 50 EMA, and the 20 EMA. Always is automated is the high, previous close, previous low, and the low. All right, so all these lines are on here. And we're going to use a combination of everything here plus the ongoing analysis of trends and channels. And we'll put that all in a big blender.
Tradometer ES oversold.
And a formula, and it's going to spit out our best opportunities in the market. So, one of the first basic skills of the high probability methodology is to identify what's called a 1, 2, 3 pattern. That is our basic pattern. Basic patterns 1, 2, 3. 3 pivots. 1, 2, 3. I didn't even circle this, but this is a good example. You have 2 good pivots where a pivot is basically where the market is moving up and then moves down, or moving down and moves up based on the time frame. It's a trend break usually. So you want to really break trend to really identify that pivot. Once you have that 1, 2, 3 pattern, the next thing is you already now have an edge because you already could put down where number 4 would be, or anywhere along this trend line. What you do is you put a line between this point, the top point, and that's that third pivot, because the second pivot's down here. So that'd be 1 up here, 2, 3. You put a trend line between 1 and 3, and then you put a parallel, clone that line, drag it down there, and then the extension of that line becomes 4 if the price ever hits it. There's other things we'd like to trade in this if it's under the 200 period, But anyway, that is a technical level. Now you have to remember, robots, algorithms, black boxes, call it what you will. They're running rampant in this market. They're trading the market off of these levels. We're able to identify those levels before they even happen, and then we can prepare and be on top of the trade. So, and again, short term, always short term. This is all based, if this was a daily chart, that's great. You get in here,
Order pending.
you have about 5-6 days of upside, you take your profit, but this is a 1 minute chart. So you're dealing with that same thing. You got 1, 2, 3, 4, 5, 6, instead of days, you have 6, 7 minutes of upside. And then you have to realize, hey, time might be running out or whatever. I don't even know what's coming next, but that's where I'll be worried about. Buying into this because of the 1, 2, 3 pattern and a reversal candle, get a little upside, deciding what I want to do. I'm looking down here at my 60, it's slightly pushing higher. We're almost getting to that 80, and we're at the 20 period moving average. You're going to run into problems here. So I would say anything held behind this level is gambling. Your probabilities are going down. But doesn't mean it's not going to go higher. So let's see what happened. So again, pretty much chopped around there and then busted higher. Now, what could we see that would help us figure that out? I think we actually did talk about this level here. I think there was what we almost called a closing price divergence here. The market has been holding up pretty good, and it was a steep thing, even though the price came down and reversed. I'm not going to call that and say that is one because it really isn't. I mean, I'm stretching the thing there. I mean, a more experienced trader might be able to spot that real fast and say, hey, we have strength. We haven't dipped on 2 candles on the 1 minute time frame. You have to be really micro on this. Anyway, you push up, and what we always talk about is that VWAP. The strongest line on the chart is the VWAP, that salmon colored line. Why not take it off? If you have a good setup, your lower trend line area, you have a trend line, why not take it off there if everything else is going to hit it? So you're out of here, this trade here. Now it starts pulling back. This probably even I didn't even mark down the tradeometer setups, but I bet if I went back, this might have been a tradeometer sell signal. But it was a divergence. Now a divergence, and is, as the HPS defines, a high. All right, we have a high on the price, so we have a low back here, last pivot. At this point, we're right here. We're at a high. Stochastics are at a high. All right, stochastics. Let's see, what am I looking at here? Stochastics are starting to turn over. Price starting to turn over. Price pushes back up, takes out the highs. Stochastics do not. They actually continue to push down. That is that is negative sell side, short side divergence. There's no denying it. There was no reaction on stochastics. We had a higher high, and then we had the VWAP. So even an upward channel there. So you had that. You had that there. It actually was there. I mean, again, there's so many great things, but you have to be in focus. You have to be in focus. I'm sure there's people in focus and could trade off of this. Again, when I'm doing a show, maybe this candle skips by. I'm looking at everything and then I'm answering the question. This candle comes in here, but you should learn this technique. This is the technique that we want to teach you. This is how now we start to automate it. We got the Rockbot here giving us most of our buy signals. Now I have a script to identify the sell signals. I want to do the same thing. So now the market's moving down. If you're short here, you're sitting pretty. I mean, but what's the next interesting level? That's what we want to know. I don't care what you're doing here when you're taking profits. I mean, that's just too much to talk about. But price comes all the way back down to the trend line. So you have a 1, 2, 3 channel. You have 2 pivots. 2 pivots make a straight line. Straight line is indefinite. But the integrity of the line continues as it goes on. A lot of traders don't realize that. You can have an upward trend line. If you break down, we come back up to it. We're gonna actually pull off of it. It's a retracement. It's the same thing here. We break out of it, pull back to it. There's a good chance we're gonna bounce off of it. So you start to see that. Now that's it's not a pure HPS. It's not the top of the line divergence wedge pattern, which I consider the best, and divergence the best setups. But it is a second tier HPS. It's also on the playbook. Now the playbook trades are on your dashboard. So if you go to your dashboard and you look at playbook, you'll see all these trades identified in a video format, and there's a little educational video. If you feel that one of them needs to be updated, let me know, because I love doing these, and there's so many out there now that I put up on in the library. Just like 10, 11, 12 setups. I don't want to get too crazy with it, because I know for me, I stick with my divergence setups. I stick with my triple, double stochastic flag setups. You know how great they work. We'll talk about those in a second. And I would say these would be the next ones. It would be lower trend line bounces, stochastic rotations, like here. This is a triple stochastic lower trend line. Happen to be almost a double bottom divergence, very steep on the stochastic, so you can read into that and get that nice move. You have a sell side divergence here, and look at the move from that. You have a trend line tag here, and then look at the move from that. All right, so now we came down here, and I right at that point I put in there was a little tradeometer setup there, so I think I marked that off. And right from that tradeometer, which is a great tool, we moved higher. Now I put a trend line from this pivot here, and this little candle. As you can see, we started right in that trend line. So that trend line is something about it, right? It's amazing how even from this little pivot to this pivot, and now all of a sudden it's holding like this. Exactly. So that was a tradeometer setup. So now you have divergences, the HPS playbook, the tradeometer, and not to mention our bot, which I'm not going to show you right now, but look at that trend line, how it's holding here. And down we go. We came back up, tested it one more time. We're at the lows. We're kind of squeezing here. Is there a setup here? Maybe a divergence right here. You see this candle right here? I would have said that was a divergence. That low, I'm sure I did. It was a very strong divergence. I didn't mark it off on the chart here. But right now, I'm going tick by tick. I don't know what's next. Well, I can tell you right now, that is one of the better divergences right there. A lower low with a reversal candle. Never really even budged on the stochastics. And we're oversold on the 5, which means we'll probably have a bounce. So I would say this moves higher here. And we actually came back down, held the low, which I think you should know also, and again, HPS rule to keep you out of danger. When you do develop a divergence like that, you do put a stop right underneath the divergence low, a tick or 2 ticks underneath the divergence low. Well, and then we can actually see we started to bounce here. Once we had this trend line and this pivot and this pivot, I put a trend line in here. That was a divergence here actually, and we got a nice pop out of that. I don't even remember what's going on here at this point. I think I was measuring something out. Oh, it was the 200 period moving average. So there's your second biggest line here. You have the VWAP, number one important line. Second big moving line here, moving average, is the 200 EMA. And whenever you break out of a divergence downward channel with the 200 above you, going into 2 o'clock, I call it the 2 o'clock 200 play. And we usually break out of the trend and we push up to the 200. And right, just like that, tell me, how do you, if that line wasn't there, how would you even know it would turn around there? So the 200, perfect. I mean, it's perfect. I just tagged it. So now you have a 200 period moving average pullback. You have a nice bounce here. I don't know what the bounce was, anything really significant. I probably wouldn't have taken it. Was there a divergence here? Yes. From this high to this high, we had a running divergence. We talked about it. You can start to see it here. Running divergence. Usually the 3 tops on a running divergence is the time to short. So when you have a divergence, and it's what we call a running divergence, meaning normally we have a high and a higher high, we never get that third higher high. That's called a running divergence. But it's also, George Lane's also kind of recognized that and called it three rips, I think it's three rips to the top, three dips to the bottom, something towards that effect. Meaning you short the third pop. If its divergence is still there, you short the third one. You give it one and you short the third. And sure enough, that was a perfect area. Then look at this. So then we had another setup. This is what I decided I wanted to do a video on this. Another HPS setup, which probably works best on a daily time frame. It's called the coil stochastic channel breakout. That's when we have a stochastic indicator that makes a series of lower highs, kind of coils up. And when the underlying chart of that represents a tight channel, then these tend to be in sync. So when we have a breakout of the coil, we usually break out of the channel. So that's what we were following at that point. This was a little divergence. And then it actually did come back down. It was a little reversal candle, maybe a retracement trend line. Anyway, it did sell off. Then we had a little wedge pattern. This was probably one of the best divergences of the day. I think I was banging the table. It had a reversal, had a lower trend line from back here to here to here. It also was a wedge pattern. Had a little tight wedge, a little steep wedge. Normally I'd have the wedge out a little bit further, but there was too many good. The divergence here was what was key here. Look at how you can see the dotted line under the red there. You can see the dotted line under the green. A very steep and good divergence. So that was that was one that I was kind of mad that I missed. I was kind of mad. That was my trade. I would have. Again, that's what we're waiting for. Waiting for only any of these opportunities. Not everything we're trading and we're just going long and hoping for the best, or going short and hoping for the best. And I think it's going higher. I don't want to think anything. I want to know this is my best opportunity. It is an absolutely must go to trade. And if I don't take it, then shame on me. That's because that was the best right there. And it pushed. And even though I say it's the best, it's the most. The highest probability of success. Doesn't mean it's going to go the farthest, but it just always sets up great. Then we had a sell side divergence here. I mean, how many reasons do you need? I don't even want to give it away anymore. You know what? Screw this video. I'm turning it off. I'm giving out too much good information here. If you need any more information, come to Day Trading Radio. I'm out of here. It's too much good stuff. I'm not dealing with this anymore. Let me get the hell out of here.